Hi, this is Zach Meir with the April Fool's Day edition of the Bulletin Board Heroes here at Vox Markets. Starting off with Angle, where I suppose that moved down from January to the end of February, made a fool of the bulls, but we've made up or made back most of the losses. Current situation is that we've had a retracement from the 200-day moving average, but bounced above the 50-day line, which is a positive. The longer we stay above the 50-day line, now at 95, the greater the chance of a move to the top of, that resistance line there from December. Currently pointing at, I suppose that's basically one-year highs in the 130s. And that could be hit as soon as the end of next month, i.e. the end of May. We're backed by that falling RSI support line, which did the trick with sort of 2-3 bounces there back in February. And basically looking like a decent rebound in progress there. Next up is Audio Boom, where people seem to be getting a little bit excited. I suppose there might be a chance of a mention in the paper, a chance of seeing a picture of Holly Valance, that kind of thing. But we've got a rising trend channel in place since October. And the previous message was that the shares tended to bounce on or at or just below the 50-day moving average. We've had that twice in the last month, and obviously at the end of, the beginning of this week as well. Just a couple of bounces there and then back up again. Be nice to see an end-of-day close through, I suppose, the 1920 area, something like that, just to get above that late March resistance. And then obviously the big prize here, the top of the channel there, heading for 26 to 27 pounds, maybe by the end of next month. We've got this rising RSI support line. I suppose we dipped just below it earlier in the week, but it still seems to be backing the trend there, the uptrend there in the shares, which has been in place for the best part of a year. Moving along to Capital Metals, where it looks like we've finally got a bit of a turnaround here. The reason for saying that, well, we already had the falling wedge break. That was around the 7 pence level in the middle of last month. All we need to do now, or one of the things we need to do now, is to have an end-of-day close above the 50-day moving average. That's around 7.7 pence. If we can do that, we should be up to 10 or 11 pence over the following month or so. 10 pence, the 200-day line, and 11 pence, that December resistance line. And that would take the shares back to where they were towards the autumn. This stage, only well below 7 pence, really delaying the upside scenario. So it looks like a reasonable risk reward there. We had that brief bear trap below 7 pence earlier last month. And that in itself is a reversal signal of note. Moving on to the next situation, which is cellular goods. I nearly forgot the name there. Here we've broken that line of resistance from the beginning of December. That was versus around 3.25 pence. The chance, I suppose, now the shares heading back towards the 5 pence area, maybe just the 50-day line around 4.6. But a little bit of a rebound now. Looks like it's on its way with a higher low that we had for the end of March and that trend line break. This stage only really well below 3p on that low, really delaying the recovery or potential recovery for that situation. Lots of gaps higher for European metals, and very impressive actually. We had that abandoned baby, which is the formation there. So you just have a one-day island reversal after a couple of gaps down, and then we've had 2 gaps up, unfilled gaps to the upside after another island gap, which is pretty impressive. What we're looking for now really is an end-of-day close above the 200-day moving average at 75 pence. That could take us up to 95 pence at the top of that September broadening triangle. This stage only really well below the overnight gap, 67 pence, really delaying the upside scenario. And if you're fussy, maybe allow it down to the 50-day moving average at 65 pence. But a great charting look there with that sort of multiple island reversals and gaps and everything else going on there for European metals. Very nice turn there. On to Jangada, which has basically done what we wanted it to do, which is always pleasant. Here we had, originally we had the top of the rising trend channel from the end of August. That target there at around 9.6 pence, so we're nearly there now. End of day close or a weekly close above 9.6 pence could take us up to a new potential target, which is an August resistance line projection. That's up to 14 pence, and that could be seen as soon as the end of next month. So looking pretty good on Jangada at the moment. We also had we also have an uptrend line in the RSI window and we bounced off that with that little dip below the 50-day moving average. Moving along, well, actually, just the only other point to say is that we get backing the upside scenario while we hold above the 8 pence area, which was resistance in the middle of March, above 8, looking for 14 on Jangada. On to NTOG, or Nostraterra as it's known to its friends. Here we've got, looks like a sort of much better position than we had even a couple of weeks ago. We had an unfilled gap to the upside, a couple of tests at the top of that gap, and then up. So that's very, very strong indeed. One of our favorite signals. And top of the channel there from back in August as high as 0.8 pence. And that could be seen by the end of the month. We also had a golden cross last month, and that worked well as well. So that's something to celebrate for technical traders. On to Orcadian, which had a brief bear trap below the initial March support there around 38 pence. Sort of 2 to 3 day event, which is quite typical. Two very strong candles now, and that suggests that there's enough power in this situation to give us a retest of last month's peak, which was around 58 pence, maybe up to the low 60s at that August resistance line projection. So looking pretty good there, and obviously backed by the fundamentals of the U-turn that the government is making on resources or oil and gas policy in the North Sea. So Orcadian should be a beneficiary of that. On to Oilex, which has managed to have a little tussle with that line, that 1 year resistance line. Really want to see an end of day close above 25, above 0.25. We've got that backing of the uptrend line in the RSI window, so should happen soon. Obviously, if you want to be safe, you'd wait for 0.26 or 0.27 and hope that then there would be follow through, given how many times the shares have failed in the mid-20s. But at the moment, 0.25 and above, really the trigger level on an end of day close basis. Let's see if Oilex can manage to scrape that for the end of the week. On to a requested stock here, which is Physiomyx, and here we've got a situation where we have that sort of slide away from the beginning of the year. Still want to see the shares break the 5 pence level, really. I think the early above 5 pence would get the stock in the clear, especially given that it's not exactly the most liquid stock in town. So a break of 5p, really, I think the obvious message there to get this situation going, and then we could head back to the highs, but not an entirely bullish situation at the moment at Physiomyx. Just 3 situations to go now. First one is looking encouraging. CIMEC finally managed to regroup after being in the wilderness since October. We've got a bullish divergence line there. We bounced off that, which is nice. We've got a resistance line from back in October to shoot for, which is around 3.5 pence. And the good news today is that we've gapped to the upside. I'd like to see the shares remain above 1.65 or especially the bottom of the gap at 1.55. If we can remain above the 1.5 area, then I think the 3 pence or 3.6 pence area could be on the cards by the end of the month. Looks like that's finally underway, and we've had that sort of sideways shuffle above the 50-day moving average, which is also a decent recovery signal in its own right. One of the best situations and probably one of the best calls of the recent past has been Sovereign Metals. The fundamentals look fantastic, but the chart was arguably even more fantastic. We've had those had a gap from the low, unfilled gap from the low, and then several more gaps since then, and obviously gapped up today as well. So the target that we had at 44 pence has been blown away, which is very nice to see. The only issue now is how far the shares could go on the next, on a future leg. At the moment, probably looking for a target up towards the 60 pence area. That would be the top of a rising trend channel from February, and at least while we hold above the mid-30s, or at least we don't close below the floor of the gap at 34 pence, the 60 pence area could be on target for the end of this month. So pretty impressive stuff there at Sovereign. Finishing off with Webis, which has been promising great things for quite some time. Broken that line of resistance there from back in November. Want to see an end of day or a weekly close above the 50-day moving average. That's currently at 2.8 pence. If we could do that, we could be on for an end of May target here as high as 4.5 pence at that December resistance line by the end of next month. That's it from me today. more updates over the weekend.